Today we're going to look at 16-1B, Statement of Cash Flows Indirect Method. So below we have the balance sheet for Americ Company, and you can see the entire balance sheet. Additional data obtained from an examination of the accounts in the ledger are as follows, and we have A through F. Our instructions are to prepare a cash statement of cash flows using the indirect method, presenting cash flows from operating activities. So what we're going to use to do this is the little cheat sheet that's up on the portal. It gives us our layout for our report. Okay. So we're at 16-1B. We first do our three-line heading. So our company name is Americ Equipment Company, and it's for the year ended December 31st, 2019. Now, based on our note sheet from the portal, we're going to start with the words cash flows from the operating activities section, and then we're going to start with our net income. So on our sheet here, we're going to have cash flows from operating activities with a colon at the end of it. And then the first line is going to say net income. Okay. Now our book tells us in letter E, there was a $141,680 credit to retained earnings for net income. So that's the number we're going to use. So we have the $141,680. The next section, if we look at our note sheet, says adjustments to reconcile net income to net cash flow from operating activities. And then we're going to list each of these adjustments. Okay. So we're going to write that out, and it's going to take up 2 lines. Okay, adjustments to reconcile net income to net cash flow from operating activities, and a colon. And the first one is depreciation. Okay, the first one is depreciation. You'll notice that we indented depreciation a little bit. We have to calculate how much depreciation we're working with. So we're going to look in our book. We're going to find accumulated depreciation equipment, and we find these 2 numbers, 99,110 and 84,320. So we're going to take those numbers and grab a sheet of paper and subtract them, and we get 14,790. So that's the number we're going to put on our statement of cash flows, 14,790. The next thing listed on our note sheet is amortization of patents, and if we look through our book, information in our book, we don't have any of those. So we're going to go down to the next one, which is a gain and loss on the sale of our investment. So we need to find that. It tells us that our investments, where are we here? Investments went from $102,000 down to 0. Okay, so we sold our investments. If we look at the bottom, they were sold for $91,800 cash, but they were worth $102,000. So we need to calculate that. So we're going to go to our scrap paper, and under investments, we're going to take the $102,000 from 2018 and subtract the $91,800, and we get $10,200. Okay, this was a loss on investment, so that's how we're going to list it on our sheet. Loss on the sale of investments, $10,200. The next heading is going to be changes in the current operating assets and liabilities, and that heading might take up 2 lines. So the first thing we're going to look at is accounts receivable. And if we look in our books, our accounts receivable started at $188,190 in 2018, and it increased to $207,230. So going to our scrap paper, we need to find out how much that change was. And we can see that our accounts receivable change was for $19,040. If we look at our note sheet, it tells us that if our accounts receivable increases, we need to subtract the amount from our cash flow statement. So we're going to list our increase in accounts receivable, $19,040, and we're going to put it in parentheses to show that we lost, or that It increased it, but that's going to be shown as a negative. The next change we're looking at is inventory. And our textbook tells us that we started with an inventory of $289,850 and ended with $298,520. So again, we had an increase in inventory. Scratch paper tells us by how much? An increase of $8,670. And then our note sheet tells us that if we have an increase in inventory, we're going to subtract it from our statement of cash flows. Increase in inventory, $8,670 in parentheses because we need to subtract it. The next one listed in our note sheet is prepaid expenses. We don't have any of those. The one after that is accounts payable. So start with your textbook. Accounts payable went from $194 to $205. Grab your scrap paper. Accounts payable, 205 minus the 194 gives us 1156. Note sheet tells us that an increase, let's go over here, an increase in accounts payable gets added. So here we have an increase in accounts payable, 11,560, and we've added it. Excuse me. The next one is accrued expenses payable. So right underneath accounts payable, we have accrued expenses. It started at $26,860, went to $30,600. So on our scrap paper, $30,600 minus $26,860, we have a difference of $37.40. And this was an increase. So looking at our note sheet, an increase in accrued expenses gets added. Statement of cash flows, increase in accrued expenses payable, and we added it for $3,740. The next thing on your note sheet is income taxes payable. We don't have any of that. So we can go ahead and figure out our operating activities. So we have net cash flows from operating activities. And we're going to take all of these numbers in this column and add and subtract them as needed. And the answer is $154,260. Okay. Okay, the next section is called the cash flows from investing section. So our heading, cash flows from investing activities with a colon. The first thing we're looking for is cash received from the sale of land, building, or investments. And if we look at our information at the bottom, it says that investments were sold for $91,800 cash. So we've received that cash. We need to account for that. So we're going to list cash from the sale of investments, $91,800. The next thing on our note sheet is cash paid from the purchase of land, building, or investments. And our textbook tells us that equipment and land were acquired for cash. Okay, it doesn't tell us how much, so we need to calculate that. If we look up here, it tells us that our equipment went from $358 to $438. So we need to subtract those. Excuse me, and we get $80,580. Also, if we look at land, we can see that our land went from 0 to $295,800. So we're just going to use that $295,800, no calculation needed. So our next line is going to say cash used for the purchase of land, $295,800. Since we're using the cash, we're subtracting it. Cash used for the purchase of equipment, $80,580. Again, since we're using cash, we subtract it. And then our net cash flows used for investing activities, we're going to take those three numbers and add and subtract them as needed. And we get a negative $284,580. So we're going to put that in parentheses. So we have one more section to go, the cash flows from the financing activities. So our next heading, so cash flows from or used for financing activities with a colon. The first one on your note sheet, it says cash paid for dividends and then cash received from the sale of common stock. We're going to flip those and do common stock first. Okay. The way we calculate common stock is we're going to take the $202,000, which is the balance in the common stock on December 31st, 2019. We're going to subtract the $102,000 from 2018, and we get $100,000. We're also going to take the $354 from paid in capital in 19, subtract the $204 from 18, and we get $150. We're going to add those two numbers together, and we get $250,000. So this is the number we're going to use. So cash from the sale of common stock is $250,000. The next one is going to be our dividends. Calculating our dividends. In our textbook on letter F, there was a $102,000 debit to retained earnings for cash dividends declared. So we have that $102,000. If we look under dividends payable, in 18 it was $20,400, 19 it was $25,500. So we're going to add the 18 amount, subtract the 19 amount, and we get $96,900. So on our statement, we have cash paid for dividends, $96,900. Since we paid it, we're going to put it in parentheses. Cash paid or received from bonds or notes payable. We didn't have any of those. So then we're going to add these up. Net cash flows from financing activities. We take the $250 minus the $96,900, and we get $153,100. We're then going to list what our increase in cash is. So we're going to take these three numbers, this $154,260 minus $284,580 plus $153,100, and we get that our cash increased by $22,780. We're then going to list the amount of cash at the beginning of the year, and if we look in our book, it tells us our cash at the end of 2018 is $47,940. So that's what we're going to list here. Since we had an increase in cash, we're going to add those two numbers together. $22,780 plus $47,940, and we get $70,720. This number should be the same as the cash at the end of 2019, $70,720, which it is. So we're going to double underline that to show that we're done and it's balanced. Okay. I know I went through that video fairly quickly. Please feel free to use your pause, slow down buttons on your video players. Okay, at this point you can go ahead and head back to your PowerPoint.